Everyone's just memeing out in Discord right now. Thanks, guys, for bearing with us. Fantastic. Gabriel's got some questions. I've seen that. My first question really was just, how's it going, man? How you doing today?
Samuel Jackson memes. Snakes on a plane. Is that what we're going for?
Yeah, well, we're like TikTok, motherfucker. It's kind of what we're going for right now. People are sitting here TikToking us as we run through our technical issues. That all aside, I think we're good to go. So why don't we hop into the AMA?
So it's pretty impressive. I do have to say that back in like 2007, I mean even like 2005, like Skype had figured out how to do like worldwide video calls on significantly worse internet. It feels like our tools have gotten worse and more brittle since then.
Right. Yeah, I know. You think it's due to more people using the internet or just, laziness?
I think it's bad developers
Right.
using bad tool chains, to be honest with you. So like back in the day, Skype was like probably programmed in C++, and it was done by people who like needed to deeply understand transfer protocols and compression. And then over time, right, obviously got bought by Microsoft, so a big corporation doesn't help. But then I'm sure they like created more and more abstract tools. As you like get those abstractions, you might get some speed in your development profile, but you're going to make things vastly less efficient and more brittle. So, I think, abstraction to a point is helpful, and at some point it becomes counterproductive. And I think society's like figuring that out right now.
Yeah. Do we need to roll the clock back and start programming everything in C++ again? I think you're getting a lot of mad people about that.
Well, the interesting thing of it is, with AI, I think it might happen because a lot of the abstractions are to make programming faster. But you like make sacrifices for that speed. But in some ways, like having less abstraction for the AI is probably an aggregate more efficient path forward, to be honest. So I think the AI is probably going to start going back to C++.
That's so funny. It's like one step forward, 2 steps back, 3 steps forward. Kind of.
Well, it's actually much better in some ways because like very clean C code or C++ code, like an AI could just like do really well on. And so you're going to get like the programming is going to compress to like experts again.
Sure.
Yeah. I just see like anyone who can fucking like anneal code to like do an output because AI can do that all day now.
Hey, as long
it's going to turn to like experts who can design and understand the systems.
As long as
eventually they'll get replaced by AI too, but that'll still take a few years.
Well, that's why I'm in the people business. But I also say like, hey, as long as we get consistent internet, I'm down for whatever. Right? For me, at the end of the day, I just want to make sure we can do these spaces without interruption. It seems like
but that's like the thing, right? Is those abstract tools like keep going down the chain, like so they're probably using them for infrastructure as well as now. So inconsistency in internet in some ways is probably a manifestation of like abstract tool chains.
Yeah. 2025. This is where we're at. We'll see what the next couple of years have in store for us. Why don't we hop into the AMA here and start getting into it? So we've got some pretty interesting questions, some very broad, some very specific. Now, the first one's actually something I know that you have a genuine interest in, like very stay close to the pulse on this one. But so Keyshore's asking, just out of curiosity, how difficult or easy would it be for Cubic to repeat the Monero attack on Caspa, according to you?
Oh, on Caspa?
Mm-hmm.
Yeah, like the guys barely were able to attack Monero. Caspa's 8.6. They're like, I don't think there's a bunch of like rentable Caspa hash rate out there. Maybe there is. but there's no way they can do it without an ASIC, right? So they would have to like rent Casper ASICs, which I think is much less likely that they'll be able to get 51% of the hash rate doing that. But to be fair too, like Monero was getting attacked also because, or was attackable sub 51% because they have like very antiquated consensus. So that type of attack wouldn't really phase Caspa, because their consensus is much better than Monero's. So Cubic would genuinely have to get 51% of the network for it to have an effect.
Yeah, that makes a lot of sense. I appreciate that. I think that ASICs really change everything. Cool. Yeah, appreciate that. I know we've been staying pretty close to the storyline on this one, especially.
So let me just like articulate something. Yeah. And it is interesting. There's this debate with Justin Bonds, and it's always funny. Like, it wasn't meant to be like a debate. It was just like a discussion, and Bonds was on the space, and I was on the space. And it like turned into a debate. And the funny thing is, like, once you make too many like good points, Justin always gets busy and has to leave. It's like, the interesting thing from my perspective, right? I'm always like open-minded. Was there is potentially like a reason for proof of stake, but it never makes sense just by itself. And so sort of the argument for proof of stake is to instantaneously enhance or increase the amount of resources it would take to execute effectively a majority attack, is like the statement. So in proof of stake, that would just mean having 51% stake. Now the problem with proof of stake is long term, it like makes no guarantees. It makes no guarantees about immutability. It makes like negative sort of prospects about decentralization and control. So, and then also like on the instantaneous front end, like it's much more readily censorable than something like proof of work. So the only sort of good property of stake is that it increases the majority attack threshold instantaneously. Every other property is worse, but proof of work does better at that, right? So proof of work creates better incentives for maintaining decentralization, having permissionless access to the network, actually creating an economically immutable ledger over time, and like creating incentives that work against censorship. So like all of those properties of proof of work are better. So that being said, if we look at proof of work, there's actually kind of like some stake implicit in proof of work. And it varies depending on the sort of construction of the system and the hash algorithm used. So the least sort of stakey version of proof of work is CPUs, because they're the most ubiquitously available, they're the most general purpose, and they're the most rentable or bot farmable asset. And so that's why Monero is the most vulnerable. And then the next one is you have GPUs. Now GPUs, depending on the type, they're more specific, they're slightly less rentable, and they're potentially more of a commitment. Now they still are general purpose, meaning you could say use a GPU to mine, or you could use it to do AI. So it's not necessarily a specific capital expenditure for mining, but it's a little bit more of a specific expenditure. So that capital starts to sort of like act as state in the system. And then when you get to ASICs, any of that capital is like fundamentally stake, right? And so when you have ASICs in the system, it increases the expense to execute the 51% attack is kind of the statement. Now there's ways that you can like hybridize this without necessarily having to go to ASICs. But I guess my takeaway from it is the one use of proof of work or proof of stake is that you can use it to mildly increase that. You can use it for that one property. So I think there actually is like some degree of optimality of balance between like how much work and how much stake you have. Now, I think it's heavily biased towards work. But I do think you want to have stake-like properties in the algorithm and the hardware that's used to run that algorithm, or you can potentially manifest it economically as well. But I think there's a purpose for it.
When you say stake-like properties, do you mean staking in order to protect and ossify the network?
So, like, take an ASIC, for example. An ASIC is a capital investment specific. That is stake.
Got it. Okay. Yeah. So, capital to protect the network, essentially. Okay, cool. Yeah, that makes perfect sense.
Well, so like, on the one extreme end of hashing algorithms, you have CPUs. CPUs are like the least capital protective because they're the most available. So it's like the least stakey-like system that exists that's proof of work. ASICs, without adding secondary mechanisms, are probably the most stake like in the system in proof of work. But what the proof of stake people have shown is you also don't need the ASICs to like add the stake component. You can just like add a capital component. But the point is there's a continuum, and there's actually a desirable property, but it's only one desirable property, and by itself, it doesn't make a good system and it doesn't make a decentralized system. But having some of that stake-like property does enhance the attack vector to an instantaneous 51% attack. But having it into like as the only thing, or even sort of being the majority of the consensus, if you will, I think is still really dumb. The primary consensus should be work, and then you should design like a degree of stakedness in the work.
I really appreciate what you just explained, because while you were, going through this, I was wondering to myself what Justin Bond's main point was, which was proof of stake, in terms of capital expenditure and capital requirements in order to attack a network is just substantially higher than proof of work, and making it a much more quote unquote secure network. So what you just said makes a lot of sense, but I'm curious if you have any reaction to what I just said there about how their point of view is that proof of stake is just much harder to attack due to the capital requirement.
They don't. Yeah, no. So they have like a point, and they have a point that like is only true for one property instantaneously, right? So saying that the 51% attack is the only thing that I'm concerned about, and then sort of like rejecting immutability, or like saying that's unimportant, or saying like a competitive economic system is unimportant that burns down the sort of control in the system competitively over time, or saying that it's unimportant to have a permissionless system, or saying that it's unimportant to have a system that is default opt-out, not opt-in, is like misunderstanding the fineness of the different properties which each consensus brings. The only property that's helpful in proof of stake that is superior is that it can be used to increase the 51%. But it doesn't even have to manifest as stake. It can simply manifest as hardware. Right? The hardware in the system, if it is, the more application specific it is, the more stake it becomes. There's other ways you can do it with like finance, and that's fine, but like that's the statement. And like no one's ever, I think, really explored this like properly. But I think there's actually like a real idea here in terms of like foliating the nuance of stake versus work.
I really appreciate all that. Makes perfect sense. My thought always was, if a government really wanted to attack via capital means, wouldn't they just print the money to be able to do so?
No. It's not even about printing the money. The way they attack, like in a stake-based system like Ethereum, is they regulate the people that have the stake. That's it.
Oh yeah, I mean I know that firsthand with my time at Lido. I had a strong Ethereum immune system pushback my entire time I was there.
Right. So like to make it clear for the viewers who weren't at Lido, right? If the majority of the state capital is in like Coinbase and Kraken and wherever else, those companies make all of their money by having access to the U.S. financial rails. So they get regulated by the banking regulations, which takes them to the Treasury, which takes them to the government. So the government regulates Ethereum via how they regulate the companies that have the majority of stake. So you don't need to buy Ethereum to change Ethereum. You just have to tell the people that are doing the staking that they have to do a certain thing.
Yeah, that's 1,000,000% correct. Yeah, I remember when OFAC released its sanctions on Tornado Cash, then suddenly you had basically every single validator and validator group out there that had to set up essentially a version of Flashbots that was OFAC compliant, and then one that wasn't.
Yeah, well, and they're still doing that. I think 65% of Ethereum blocks are still OFAC compliant.
Yeah, which is insane.
But like, that's just them not like fully playing that card.
Yeah.
Right? Because like what they could do is they could say, not only do you need to build OFAC compliant blocks, we are going to sanction you if you build on non-OFAC compliant blocks. So they can like simply like tweak the thing, and then the whole system becomes OFAC compliant. The same mechanism that caused 65% of blocks to be OFAC compliant can cause 100% of blocks to be OFAC compliant.
I think when I say that, and don't take this the wrong way, but like number go up can be a mind virus. Not really always talking about useless meme coins that have no purpose but to, rug people. It actually has a lot to do with what you're referring to when it comes to not caring about the centralization, only caring about the most profitable way in which to approach, a blockchain, the one that only makes number go up, regardless of the ramifications of the design, or the centralization of its actors. And then what happens is, well, again, as we've been talking about, what just happened with Ethereum, not only 2 years ago, but still going on to this day. So, I think that was really well said. Thanks for answering that question for my own. That was not technically in our Discord chat right now, but I do value that. Do you have anything else you want to add here before we move on to the next one?
Yeah, we can move on. I just, I like to share little insights as I have them with everybody.
Yeah, that was
something to chew on.
Freaking really valuable. Hope everyone picked up what you were dropping down because I was sick. You actually kind of already answered. So I'm going on to Gabriel's questions, and I think you pretty much already answered the first one. But why ProgPow and not RandomX for maximum decentralization?
Yeah, well, so like, given what we're seeing in the area, it's because like ProgPow is less sticky, or is more sticky. It's more staky than RandomX. Right, RandomX is like tough because Monero's always been kind of like bot farmed, and that doesn't really like exist for GPUs. So that's like part of the answer. Now, the interesting thing is, depending on how you do your epochs, you can tune up or down like how staky ProgPow is. So, like, for example, if the DAG size went to like, say, 70 gigabytes, it means that the only card that would like be able to run it would be like an A100, which would make it a lot more capital intensive and a lot more basic like.
Perfect. Well said. If you have any response there, Gabriel, let me know. Definitely come back to that one. A couple more questions though from Gabriel. This one's actually more of a scenario. He's playing out the long game.
Well, let me make one other point there.
Yeah.
So there's another component here too, and I haven't like fully worked this one out. So this is like a little bit less fleshed out. But I believe that there's actually ways in which you can create more or less energy intensive algorithm variants. So, for example, if like an algorithm that's only doing hashing, that has like a certain amount of energy to capital ratio, versus if you're requiring it to have a lot of memory like ProgPow, that has a different energy to capital ratio. And so depending on what algorithm you use, there's like a prescriptive energy to capital ratio that's going into it, which is really defining in some ways like how snaky the network is. So there's like a finer tooth comb in terms of like how you can adjust that relative security just based off the algorithm design. And it could be as simple as like changing DAG size.
It's very cool. Very, very interesting. Let me know your thoughts there, Gabriel, because I'm going to get to that question in a second, Kishore. I see you pinging me with Noah's point, so don't worry, I'll be getting to that one. But that's super interesting. That makes a lot of sense too from the way you put it. So really valuable answer there. Let's walk through this scenario together, because this is talking more about game theory in the long term. So Dr. K, you've talked about Quai Network having incentives both for cheap electricity and low latency. You say it like this will incentivize decentralization, but what if it causes the opposite? Suppose I put up the capital to run a massive node in the Midwest, let's just say Virginia, complete with a nuclear reactor for cheap electricity and high-speed cables spidering the entire Northeast. Wouldn't this yield a significant mining advantage? So doesn't this mean that the system would likely evolve to be centered around supernodes that have both cheap electricity and high-speed cables?
Okay.
No?
Yeah, if like people want to put up private networks, that like connect the hash rate together, I suppose you could do that. It would be my expectation that the hash rate is diverse enough that the expense of like putting up private fiber for that won't take place for a super long time, if ever. So like what you'll see, right, is even if you have like hash rate, you somehow like manage to connect within the Northeast, like you're not well connected in the West. And so maybe you're optimized for like a single shard, and that shard could change too. So then like over time, like the shard could move away from you, or you could get like fractured into a couple different shards, at which point like your hash rate difference in terms of where it's located is going to like disadvantage you, right? So if you're, in Virginia, but someone's got hydro in New York, even if they're over the public lines, they'll still probably do better than you. If like the centroid of the shard is in the Northeast. So the fact that you have subnets kind of makes it dynamic, and there's no such thing as like a monopoly on the subnet. The subnets will want to morph, and the subnets like will want to increase. So it would be very hard, I think, to have like a singular monopoly. I think the fact that there's disadvantages to having a lot of hash rate in a single spot helps move hash rate across the geography, which is decentralizing.
Yeah, shout out to Gabriel. If you have that nuclear reactor contact, let me know. That is, it's a fun scenario, and it's a good point, but that was a great answer. I really appreciate that. And who knows, maybe the nuclear reactor thing will happen one day, but if one pops up, there's going to be a lot more than just one if we're scaling up to that level, which, by the way, we are, but give it some time. Regarding chi emissions, so this is a two-parter. Do you really think it's a good idea to make chi not perfectly proportional to hash? There's some extra.
It is proportional to hash.
So the answer is it is proportional to hash. Okay. Let me just go through this next part. You talked about something where chi emits half as much per hash every 2 years or so. I would argue that improvements in hash and kilowatt hours has a similar effect on the overall value of goods, improvements in the price of electricity, and thus we should have just chi perfectly proportional to hash with no other factors. But again, the answer is it is.
No. So there's an open loop adjustment. So it is proportional to hash, but we're projecting the efficiency of FET-based GPUs based off Long's law, which we want Qi to reflect the change in kilowatt hour prices, not the change in GPU efficiencies. Right. If we didn't do that, you wouldn't call Qi an energy dollar. You'd call it a compute dollar.
Right. Yeah. No, that makes sense.
Right.
Second half of this question is about the stoppage of the halving of Qi emissions. So he says, concerning the halving of Qi emissions per hash, did I hear correctly that this stops in 2030?
Sorry. The Qi never fucking changed, guys. Like, I'm confused.
So I guess maybe Gabriel's just confused. So the Qi emissions per hash didn't change?
No. Instantaneously, the Qi emissions per hash have not changed.
There you go. It was the block rewards that changed?
The Quai emissions per hash changed. The Qi emissions did not. Qi emissions are still the same. It can change the block reward because the difficulty changes, but the Qi emissions per hash have always been the same.
There you go. Cool. Yep. Hopefully clear as day. I know it can be a little bit opaque, but that was a pretty direct answer. Quai changed, Qi emissions stayed the same. Did the Quai emissions stop after 2030? Just to be fair, try to correct that question for him.
Did the Quai emissions stop?
Concerning the halving of Quai emissions per hash, would that stop in 2030?
The halving of Quai emissions. The Quai is emitted proportional to the log of hash. So depending on how the network grows, that will determine how the emissions of Quai goes. But the inflation rate will tend towards zero over time.
So I have awesome answer, by the way. Perfect. So the next question actually has nothing to do with everything we just talked about. Actually, it has to do with stats.quai.network. So Noah and Kishore both pointed this out, and apparently a bunch of people in the community have been talking about this. But the Quai Qi graph on the conversion page, or sorry, not stats.quai.network, but the Quai Qi conversion page, it might be incorrect. It's basically almost a linear upwards progression and then just spiking.
No, there's an issue. That's clearly like data dropping out. We'll have to look at it.
Yeah, so we'll take care of that, guys.
It's just like an issue with the page, right?
Yeah, thanks for catching that live. No worries. That small little hiccups on our end, but we can take care of that, and it should be rectified. No, Gabriel, it's a good question. Again, that's why that's why we have these. We want to make sure that you do ask every and all question that comes to mind. We don't want you to feel like you shouldn't ask a question because you don't understand something completely thoroughly. That's actually literally the whole point of this, is to ask anything you want. You could ask him about his workout schedule, for instance, or you can ask about that as well. Glad to help clear that up. Yeah, that was a great question, so no worries there. We're about 45 minutes in. Though obviously we had a little bit of a hiccup at the beginning. I just want to take a moment to pause and say, if you're listening on X, thanks so much for joining us. Make sure you like and reshare. Don't forget that we do this twice a week. The Dr. K AMAs are on Monday and Wednesday, 4 p.m. UTC. It's 11 a.m. Central Time every week. And so I really appreciate you joining us.
If I seem like I'm like abrupt in the answer or confused, it's that I'm not like understanding the question or the phrasing. So yeah, no, it's good to ask questions, but just need clarity on what the question is.
Right. So let's shift gears. So we've got a bunch of community questions gathered by Keith Shore about slippage. And so let's talk about slippage. Let's talk about the slip. So again, long list of questions, about 11 of these. Do with that as you will. So the first one is, what factors besides pool volume influence slippage fluctuations in the Pelagus wallet?
So the change in the context is that when you do conversions between Quai and Qi, there's a slip parameter. And the thing is that like Y and Chi kind of need like a book, if you will, in protocol, like a depth, kind of like an AMM kind of like has depth. Because if you just instantaneously allow any amount of Quai to go to Chi or Chi to go to Quai, it allows the hash rate to like manipulate somebody with both hash rate and money to manipulate the emissions would be like the statement. So by limiting the book depth in the Quai to Chi conversions in protocol, you prevent that. And the factors that go into calculating the slip are basically the flow rate that has been going through on average. So like how much Quai Chi has been being converted over the last, I think, 4,000 prime blocks. And then the delta, or the rate of change in the protocol offered rate. So during times of high volatility, you pay a high slip, and during times of and it's only in the direction of the volatility. So you actually pay a lower slip if you're going opposite vol. You pay a higher slip if you're going with vol. And then if you're trying to convert a lot more than the average that's been converted, you also get slip. So those are the factors that like play into it. So if you want to like convert a lot of Quai or Chi, you can do it. You just should do it like as sort of like a flow, not one big conversion. And as you flow, the average conversion flow rate will increase, which will allow you to convert more per block. So
Perfect. Yeah. Second question is, can past prime block data be used to predict better windows for conversions?
Yeah.
Yep. Figure that was just a simple yes. Do we need to expand there, or is that really, think that sufficient?
No, I mean, it's a controller. Everyone can like gauge the controller based off like what they think the like hash rate will be. So if I say like I think the hash rate is going to be consistent over the next like 4 hours, I can predict both the slip and the exchange rate.
Yeah, perfect. It's public data. It's on the chain. Go take a look. Utilize properly.
Well, and it's designed for you to do that.
Yeah, exactly.
So like, yes, you should do this, and it will help you make money.
Be smart. Do smart things. Look at data. Third question: if refunds are locked to prevent reaggregation, does that mean splitting into smaller conversions is always safer? I can
refunds are locked to prevent reaggregation. Oh no, conversions are locked to prevent reaggregation. So this okay. I think what he's saying is that if you get perverted, I don't think did we recreate the UTXOs and lock them? If that's the case, then the thing that's safer is to do more conversions of smaller amounts with higher max slips.
Yeah, and broadly that's what the community is kind of coalesced around. I see in the chats quite often people recommending that strategy, so confirmed. So next question is, how should users decide the right slippage tolerance above the suggested minimum? What's the proper way to do that? Think FAFO, right?
I mean, you're basically looking at like what you think that other people might do in the same like prime block as you. And so you have like an uncertainty about that. You have an uncertainty about size. And this is also like another reason that you may want to like flow more than just like try to do big things at once. Because like you have dynamic uncertainty. So like if I flow, and any like given failure isn't, or like any given non-conversion, like non-execution doesn't like really matter to me, then I can like set my slip very tight, right? But if I'm worried about like a single conversion working, I can set my slip higher, but at the same time, then I'm going to potentially pay more, right? So it depends on like your need for speed versus cost efficiency. If you're like highly cost efficient, you should do relatively small things with like relatively tight slips. If you're more speed oriented, you would do bigger amounts, but you'd also put in bigger slips, knowing that you might pay that amount of slip.
I think also broadly, this is just a concept, in all of crypto, honestly, even into TradFi, that's pretty consistent.
Yeah, no, like you're absolutely
dollars worth of whatever in one trade.
Yeah, you're absolutely right to draw that parallel. So the parallel would be like, let's say I'm like buying or selling Bitcoin or ETH against USDT, right? If I like want my USDT right now, I can just splash the book and I'm going to hit a certain slip doing it, right? But if I'm like more price sensitive, I want like better efficiency and like lower gapping, right? I might like spread out my sells over a couple of days. It's literally a perfect analogy.
Yeah,
it's like how you interact with any order book.
Same, and not different. One would say.
Yeah, no, it's the exact same. Thank you for simplifying that answer. So, yeah, like it's the exact same as how you would deal with any exchange.
Cool. Yeah. Next question is, can the wallet show a recommended slippage range instead of just the minimum? So can we modify Pelagus to do that?
I mean, the min is like basically like current, but we don't have any predictive capabilities on like who else is going to come in on the prime block. So no, you can't. You guys just kind of have to figure that one out yourself.
I think that's pretty fair. I'll also add in that, yeah, we won't even call them a malicious actor. Let's just say someone that's playing around who could just do it, as you just mentioned, and completely, basically, modify the slip overall. And then, you'd be pissed at us for saying, hey, this is recommended, but it didn't actually turn out that way. When in reality, it really had nothing to do with the recommendation, but rather the actor in question who came in at last minute. And they could be completely innocent.
Oh, but it doesn't even necessarily like mean there's like a malicious actor.
Yeah.
Right? It could just be like a lot of people want to convert.
Exactly.
Right? So like if I go and I see like a book, right, on any exchange or any market, even a stock market, and I'm like, I'm going to market sell that shit. Right? I could see like the midpoint price, and I could like market sell happy with where the midpoint price is, and even the impact that my sell order is going to have on that midpoint price. And then 3 other people could also do the same thing at the same time, and I get unlucky in the ordering, and I pay 5 extra basis points. Right? Like that's literally how markets work. So again, I love Christopher's analogy here. It's exactly like a market.
So that's fun. I love the vibes. This one I think is going to be interesting because it's kind of a reasoning question of why we did something the way we did. So the question is, why is the lockup period for failed chi to quai conversions the same length as for successful ones?
Because it does the reaggregation.
Oh, okay.
So the whole point of like chi is it is one of the tenets of privacy is that you shouldn't be doing like chi reaggregations yourself. You should be doing it through a merchant or cooperatively. So if we make a market or we limit supply of reaggregation, it encourages cooperative reaggregation. So that's why we do that. So anytime we like put new UTXOs out, if they're not under the same lock period, it creates a mechanism for circumventing the limited reaggregation supply capability.
Yeah, solid answer. That makes sense. I was kind of curious about that.
Right. So like, for example, if we didn't have that, people could just go and like put in a conversion transaction instead of slip that they know is going to fail. And then they could reaggregate that way.
Yeah, teamwork.
Right. But like, we don't want that. We want people to have to like cooperatively and like economically be incentivized to cooperate, to reaggregate.
The separate question, just me talking out loud, tell me if this is dumb, but the reaggregation is like a core component of how token works. Isn't that correct?
No, the burn down is like a component, right? So like you create shits, and the idea is if you add data to a chit, the dust collection is basically like where the chits get removed from the ledger after like a certain duration, which cleans up the ledger and that data.
Okay, yeah. So it's not reaggregation, it's the burn down. Okay, totally separate concepts. Got it. Okay, appreciate that. Yeah, I was conflating the two. Yeah, nice. Why does a failed conversion take 2 weeks to revert, and can that process be shortened? You basically just answered this already. The answer is no. And the reason, again, is reaggregation. I don't know if you want to expand on that one at all, but...
Nope, I think we got that.
Excuse me there. So refunds on Qi to Quai are locked... hold on. This is phrased a little weird. So this is actually a question, but yeah. Refunds on Qi to Quai are locked to stop reaggregation.
Correct.
Okay, and then what risks would reaggregation create if it were allowed, and does what risks would reaggregation create if it were allowed, and does blocking it come with any trade-offs for liquidity or user experience?
So the whole delay in like unlocks, conversions, all these things, they're like intimately related to the controller and the monetary policy, as well as the privacy that we would like to emergently see from Qi. So changing any of those properties would negatively impact one or more of those things.
There you go. Yeah, and those are the trade-offs. So, cool.
So people like doing this, just to be clear. Like, you are early, and the friction that we put in the system is meant to be there for like service providers or market makers. If you're like a user, there's going to be ways that you can interact without having to do this. This is really meant for like sophisticated market participants, and that's who it's been designed for.
Right. Yeah. Well said. And of course, if you want to build a way to do that, feel free. It's wide.
Yeah, I mean, you guys can become the sophisticated market participants, but the whole design here was not meant to make, like, it wasn't thinking about this to make this like easy. This was designed to get the properties we wanted out of the system, recognizing that friction would be taken on by sophisticated market participants.
And of course, if you don't consider yourself a sophisticated market participant, but you're learning about this, well, guess what? You're on your way. You're on the right road.
Yeah, I mean, you can become a sophisticated market participant. All I'm saying is, like, the question of can we reduce it, it's not about reducing it. It's about people providing services or exchanges or dexes that ameliorate these problems, and they'll make money if they do it correctly. So you can become a sophisticated market participant by providing services and balancing these books and arbing the markets.
Love that. Almost at the end of this list of slip questions. Of course, we are at the hour. So before we go to the next couple questions here, I just want to say, don't forget if you're on X to like and share this. We do this twice a week. It's 11 a.m. Central, 4 p.m. UTC. We're going to answer the remaining questions. I see Gabriel has one. I think that's about it beyond these next couple of questions. So we're going to stop it.
Well, hold on. Just real quick. We're getting ready to do test flight for Kipper mobile. So if anyone's interested in the crowd on Discord or Twitter, just like reply if you're interested, maybe DM Christopher or throw it in the chat that you're interested, or again, just like tag Christopher and we'll make a list of people who want to help.
Yeah.
Test flight Kipper mobile.
If you're here, you're a believer, you're loyal, and we want to reward that. So you heard that right. Feel free to DM me or just drop it in the chat here.
Kipper Mobile is pretty cool.
Yeah, we're gonna get a list of you guys together, and Kipper Mobile is happening, and so you're in. If you hear this live, you are in. Just let me know.
The setup flow is like nice and simple. The setup's basically log into Twitter, and then hit like authorize app, and that's the setup. It creates your wallet. It like loads your account. It registers you to the contracts, and like you're ready to go. So it's literally like one extra click beyond logging in Twitter. Oh, pretty cool.
I haven't even seen this yet. I'm actually pretty excited to see that. Can't wait. Let's bang out the rest of these questions. So this one is fun. So can we anticipate when more people are converting Qi to Quai so we can adjust slippage proactively? If we can do that, how?
Well, that's like the infinite question of what it means to be in market amateur.
Exactly.
Right.
You can get free money. How?
Well, so I mean, there's different like levels of this, but like I'll give you a very simple one. Go to Quai Stats. In the URL, there's like a thing. It's like hours. If you go to 24 hours, you can actually change the URL to say like 100 hours. What you're going to notice is a sinusoid in the difficulty. That is an exploitable arbitrage opportunity.
And of course, you're referring to stats.quai.network, just to cap that off. There you go.
Yes.
There's your alpha drop.
Yeah. So, and if you exploit it correctly, that line should eventually become flat. But while there's a sinusoid, there's an obvious arc.
I can hear the collective Mr. Burns fingers amongst the crowd. All right, excellent.
Yeah, so like there's your arc right there. Figure out like what to do, it'll flatten that sinusoid, and until that sinusoid becomes flat, there's an arc opportunity.
Excellent. Is there any way to track the number of pending conversions in the queue to better judge slippage requirements? Basically kind of the same question. And so we've kind of already answered that. I don't know if you wanted to expand on that further, but you basically already answered that.
One more time. What was the question?
Is there any way to track the number of pending conversions?
I mean, they exist in the zone blocks. So you could, and I believe they use a precompile. So like you could, yeah, like I don't know if we have an endpoint for it, but like it exists, the data exists. Yeah. if you're running a node, you can get the data.
I was going to say another
And there's probably an RPC request you can make to get the data too. Not sure which one it is offhand, but if you're getting transactions in blocks, you'll be able to identify those transactions. Yeah.
Awesome. Gabriel, so again, we're going to answer Gabriel's remaining question.
And you could also monitor the mempool. So if you're running a node, and I was trying to identify pending, I'd be looking for a certain transaction type. I believe it's type 2, both in blocks and in the mempool. And that would tell me what has been queued for the next prime block, as well as what's trying to get into the next prime block.
Oh, I see that, Kishore. Thanks for pointing that out. Oh, yeah, thank you. Let me end with that question. So I'm going to ask Gabriel's question. It's actually going back to the ProgPow versus RandomX debate, and then we're going to end on a Monero question. So I figured you'd like that. So
No. I like the strategy question. You see this?
Which one?
Rock.
Oh yeah, I was about to ask that, but I was like, well, it's Bitcoin, right? And it's leverage.
Yeah.
Right.
Yeah. We can't touch on that. I think I have a pretty good description of it, but we should touch on that. So ask your last question, and then
all right,
I will cover that one. I think that's actually a good question.
Okay, so we have 3 more questions. So we'll end with that question on the yield with Michael Saylor. I'm going to hit Gabriel's question. So it's ProgPow versus RandomX. What do you think the idea that AI hardware will diverge from the standard GPU architecture?
Well, I think that's probably likely. Actually, I think it's already happening inside of NVIDIA. So the thing about AI is that it's driven by memory and the connections to memory. So GPUs were like the best thing, but they're like making like whole wafer like inference engines, because you can get better connectivity more cheaply on like a wafer than you can, individual chips that you like run. And I know multiple companies are working on this. NVIDIA is doing it. I know Tesla's doing it. So like they have like, I don't know, is it 60 millimeter wafers or whatever? No, that's not the right number. 60 centimeter wafers. Yeah, I think that's what they're using these days. But basically it's just like racks of them. And you can get much, much higher like degrees of connectivity. So they're better optimized for AI. So yes, we will see divergence. And I think you're at some point going to see a divergence between training and inference. So the way you would optimize your inference hardware is like different than the way you would optimize your training hardware. So I think you're going to see training specific and inference specific hardware at some point. So
that's interesting. There's a follow-up here. It's going to conclude saying that Gabriel's concerned that ProgPow will lose in decentralization long term. And so here's the thought behind this. Let me know if Gabriel's in too deep. But my expectations for the next 10 years is that leading AI hardware will diverge from the GPU architecture, just like you said. Assuming that Quai Network takes off, this can mean that GPUs, particularly ones that mine ProgPow, will be the new ASICs. And now with the U.S. government potentially entering the chip manufacturing space, and they did just take over 10% of Intel, so that's true. I'm deeply concerned about ProgPow threatening our decentralization in the long term. Gabriel's intuition is that we might regret choosing ProgPow over RandomX, and wants to know your thoughts about this.
So,
in too deep, right on point.
Yeah, I mean, I think the concern is correct. I don't know if the projection is correct. And not just like Gabriel. I think there's like uncertainty in projection like across the board. So yeah, I mean, yeah, yeah. I'm concerned about the same things, but I don't think there's like a clear, definitive answer like projecting this into the future.
Let's for fun.
That being said, though, like, given what I understand about the markets and what I project, I still think CPUs are actually better than CPUs. I would actually, at this point, say it might be better to have like a bigger DAG size, honestly, than we currently have to make GPUs even a little bit more specific.
Okay, so that's awesome. I was about to ask you for fun what we could do in that situation. You kind of just actually answer that in a manner of speaking, a larger DAG size.
Yeah, so like our DAG size grows. I don't know if it's like growing maybe at like a good rate. We might like want to change it.
Do you share the same thought that with the divergence of AI away from GPUs specifically into their own, do you think that would turn GPUs into more like ASICs? So only for GPUs?
No, I mean, GPUs are always be general purpose, right? Like there's use cases for GPUs outside of AI. Interestingly, graphics.
Yeah, video games.
And I don't see that changing anytime soon.
You cut out the first letter of that acronym, right? Just the graphic.
Yeah.
Wait, you use your GPU to play games? What? I think
there's some people that do that actually, right?
I know, crazy. Wow. In fact, most people, vast majority. I appreciate the question. I like the game theory. I like seeing things on long timelines. It's how my brain usually operates. So I appreciate that. And
No. Like he's thinking in the right direction. Like I say, I think that there's it's too complicated of a question to try to meet out over like this format in this period of time.
I know.
That being said, I have thought about this deeply, and my thoughts are that GPUs are still the better choice.
There you go.
But I will.
You still there?
Given precision in that estimation, right?
There you go.
So
you're back.
Like I'm not gonna
try
to provably die on my sword there.
Because I think Dr. K, just to interrupt, we lost you for that. We didn't hear what you said. You cut out.
Yeah, I just said there's a lot of imprecision in the estimation, so I'm not gonna like die on my sword on this argument.
Yeah,
because
sure.
You're both estimating and projecting, which has implicit, imprecision. So I would just say it's like based off.
Became hard to predict after 2016. Before 2016, pretty easy to predict things. Nowadays, not so easy.
Yeah, I mean, there's still things that like are predictable, but there's enough complexity in like this question that I don't think there's a definite answer.
Yeah. Cool. I hope you appreciate that, Gabriel. And of course, we love your questions. Any more you have, looking forward to them on Monday. We're going to ask the Monero question, then we're going to end with that Michael Saylor question. So I need to link you, and I'll just send it to you in DMs right now. This post essentially breaks down everything this question's about to ask. It definitely, you're not going to have time to read it. It's a whole post on Monero, but Kishore is asking if you went through the Monero master node proposal. And that's what I just linked you.
Where'd you link it?
In Discord. It's pretty long.
So, yeah, let me just look. So, like, I've been paying attention to some of the proposals. basically, basically, I'll say this. Okay, so Monero like sucks in terms of its consensus, right? It's like it's Bitcoin basically. It has really slow block times. It doesn't even like update the proposer intra-block. Like it's wild. So like this is effectively like Bitcoin consensus. It's just 2-minute blocks set of 10-minute blocks, but it's Bitcoin consensus. So this is like not even like the model like T forward of like consensus. So there's a lot that they can do right now. They haven't even gotten 51% intact. Like, let's be clear. They have gotten sub 51% intact because they don't even have like Model T forward consensus yet. So if they just upgrade to work shares, they would eliminate like all the negative effects of they would eliminate all negative effects like of these sub 51% like attacks. And they would get to like a 51% threshold. So then like Cubic would like go fuck off until they could actually get 51% of the network. And they can do that without moving anything away from proof of work. So there's actually like an enhancement on proof of work that I've been like ideating. If you think about master nodes or like stake, implicit in stake is the introduction of a clock, and the trusted like nature of the clock, which, okay, that's a thing. The clock does get you something, but it's trusted. So, if your time servers go off or, someone hacks the time server, this actually happened, I think when Ethereum was originally testing maybe like the London upgrade or something, they had like a time server issue and then the network forked. But all proof of stake systems are predicated on time. If you're not running on shitty Model T consensus and you have something like work shares are actually getting you time stochastically. So it's not trusted in that it, you're looking at a time server, but the data coming in from the shares is giving you a statistical clock. And I believe that there's a way that you can use that statistical clock to create consensus that's better than 51% in proof of work. Just like my statement. It's a working hypothesis, and I haven't like fully fleshed it out, but basically, for one of these like liveness attacks to work, or even for like a denial of service attack to work, the time at which blocks arrives becomes important. And you can use that time to ascertain if someone's cheating or acting uncooperatively. Now, if you're doing it on a time server basis, people can lie about time, especially if they're like imputing it into the blocks, but the blocks themselves create an emergent clock. And if that emergent clock becomes accurate enough, we can actually use that property to start classifying bad behavior in work-based systems. So I think there's actually like an extension of proof of work that we could construct using something like work shares in a linear chain to start being able to create this clock and classifier that would identify withholding attacks and would identify sort of like non-cooperative behaviors. And you could boot those shares out of the system.
Nice. Okay, cool.
So like I think there's a way to improve proof of work consensus well beyond the 51% threshold, I guess is my statement. I haven't gotten all the way there yet, but I believe that to be true.
I look forward to it. I know you like to expand on these ideas, essentially, with your intellectual counterparts, then put papers together. So if that's the case, then we'll have a TLDR kind of breakdown for it. Make it easy to digest. I love that. I love that it's still, it's 2025 and there's probably going to be decades of this still of like improvements and areas where, you can make more efficient proof of work and continue to.
Well, so proof of work becomes proof of time. The certainty on which I can time events in a trustless way gives me the basis for the secondary classifiers. So like proof of work done correctly becomes proof of time. Proof of time then allows me to figure out if people are fucking about.
Yeah, that's great. Yeah, it's really great stuff, man. I look forward to that because you're right. When all said and done, just fuck with the clocks. If you mess with clocks, you mess with time. Everything gets thrown askew.
Yeah, I mean the simple way to do it, right, would be like use a time server, and then have people like attest to when they see something. But what I'm saying is that information is encoded in the shares. It's encoded in the blocks, and it's encoded at a sufficiently high rate that you can get statistical certainty without having to go to decentralized attestations or time providers.
Right.
That's like the statement. So I believe there's a way to go well beyond 51% thresholds.
Makes
So like
sense.
proof of work is no longer like the heaviest chain. It's like the heaviest cooperative chain.
On time.
Well, the time gives you the mechanism to classify cooperation.
Love it.
So like work gives you statistical time. Statistical time then allows me to classify if people are like working cooperatively or uncooperatively.
Right. Speaking of fun,
yeah.
This has been fun. We're going to be on our final question here, and we said we were going to save this for last to have a little bit of a speculative